So the idea now is have to fireside chat. We actually don't have a fire here. I think you understand why. But we just imagine that. I think we're like sitting around a campfire, or maybe since we're wearing suits, we're sitting in front of a fireplace and having an informal chat about digital euro. Actually, there are some people watching, but we don't mind too much. The plan is that I will ask a couple of questions to start the discussion, and then I will also open it for questions from the floor. So you can already think of your questions, and then I have some more questions once you have had yours. But maybe just to start and build upon what you both also said in your speeches. We see that people are less and less relying on cash as a means of payment. All the commerce is becoming more digital. We're using card payments mostly in Estonia for everyday purchases. So, in light of that, how do you view digital euro as? Is it more of a technical upgrade of the cash that we have, just making it digital for the future, or does it have a bigger meaning or importance for the monetary union or the strength of our currency? So, as a sort of a general starting question.
Actually, I find this way of thinking about digital euro as digital equivalent of euro coins and banknotes as a useful way to think about digital euro. And often when you think about certain functionalities of digital euro and so, often you are well helped with thinking the functionalities which are kind of closer to replicating what euro cash would do. So from that point of view, yes, and it's in any case expanding the use of central bank money, because currently the central bank money is cash, and cash is in decline, so that's a way to bring central bank money into 21st century, also thinking about all the monetary sovereignty aspects and so on. But at the same time, obviously there is more to it, so that's why both of us were talking a lot on the resilience and strategic autonomy of our payment solutions, payment infrastructures, something which we cannot, so to say, completely leave to the outside world, where we need to have control of our own.
Right. Piero, you want to add to that?
Yes. I mean, let me take this question from a pure central bank perspective, right? What do central banks do at the end of the day? We have in our mandate one simple thing: offer to the society means of payments, both at the retail level and the wholesale level. We have been doing that for centuries, if you want, right? Thereby constructing this healthy equilibrium between private and public money, which has served us so well for so many years, again, both at the retail and the wholesale level. So from our point of view as a central banker, we should keep doing this, providing liquidity and means of payments to the people, both at the retail and the wholesale level. And this is what we are doing essentially at the ECB. Now, for the retail, why do we have a problem? We have a problem because if cash is not, although we do our best to keep it in the society, the technological transformation and the preference of people are somehow marginalizing cash. I think just one simple thing. About 1/3 of our transaction is e-commerce transaction. You cannot use cash on that. So if we don't provide an equivalent to cash, we are restricting the freedom of our citizens to meet their needs on an important space of their daily life. Again, 1/3 of ours. So for us is a mandate, is to fulfill our mandate to provide liquidity also at the retail level. That's why we need to do that. We are not here to decide how people should be paying. Let them choose what means of payments to use, but we should provide that. This seems to be a small thing, but has a very far-reaching consequences, especially in Europe. Because the marginalization of cash, the space taken by e-commerce is not taken by European providers. More and more non-European providers are stepping into this space, therefore making our dependency every day stronger. So as every day goes by, we become more and more dependent on strangers, especially that. So that's why, this element of keeping liquidity and means of payments available to people is so strategic. Because preserve the freedom of people to choose how to pay, and at the same time preserve or reinforce or help us to regain our independence in this field.
Yes. So I understand very well, and I think it's easy to explain the point that we don't want to be completely reliant on non-European payment solutions or card schemes for such a critical function as payments is. Now, you both mentioned also the difference between public and private money and the need to provide by the central bank, sort of the central bank money in addition to the commercial bank money that you use regularly when paying by card. This is actually something that I have found much more difficult to explain. So is it something that only the central bank economists care about, or do you think the fact that we need to have central bank issued money directly in the hands of the public is also that important that it's possible to explain it, why it matters?
Well,
either way, Piero.
Well, depends who we are talking to. Huh?
Mm-hmm.
So communication need to be tailored depending to the audience you have in front of. But don't get confused. My sense is that people understand much better than we think what public money and private money is. Let me give an example. As we know, so many years ago that we saw people lying before, in front of a bank when there is some rumors about the stability of that bank. Moreover, as we discuss with people, we explain to them, people understand why people is so attached to cash, for example. Because it's easy to use, is inclusive, and preserve privacy. So, in some sense, people are able to distinguish the different form of money. And you can see, as I said, both when you see some tension, you see people going to cash, but also when we now test the people knowledge about the digital euro continuously, right? And they seem to understand. They say, yes, we would like to have some sort of money just as an alternative, just as a way out. So, for example, our latest figure is that 66% of the people that we interview are willing to start using the digital euro. Not bad for something that it doesn't exist yet. Why such? Because people understand, associate this idea of having a digital form of cash in the digital era. So I wouldn't be so skeptical. Obviously, here we are on a conference where people are very well educated, so they understand that this equilibrium between private money and public money reinforce each other. It's not going to be, we are not talking to competing with the private sector. We are talking about providing an anchor to the private sector money even in the digital era. So that's what we are talking about, and we should not shy away from explaining a little bit more complex concept, especially when you are talking to an educated audience.
Valdis,
you're as optimistic, or you share the views?
I broadly share this view because indeed, if we talk about safety, central bank money is as safe as it gets. So from that point of view, it provides some additional opportunity and layer of reassurance for citizens. Also important element which I would mention, which features very much in public discussion, is a question of privacy. So we have designed this digital euro proposal with a high level of privacy in mind. So in a sense, central bank will know less about people's transactions than currently commercial banks or credit card providers know. Of course, it's not going to be complete unanimity because we also have our anti-money laundering, counter-terrorist financing legislation. There is a risk of fraud which we need to address. So there are going to be some safeguards, but in a sense we have been having those privacy considerations very strongly in mind. Also another element is this offline functionality, which again brings digital euro closer to cash in terms that it provides almost cash-like unanimity in case of those offline digital euro transactions, because those are transactions which takes in a physical proximity and it also provides for a possibility to have those transactions, as I was mentioning, even in a situation when there is no internet or there is a power outages, there is still possibility to do transactions in offline digital euro. So it's add also this additional layer of resilience. So I think when we are having those public discussions on those topics, obviously it's just arguments that, this is central bank money versus commercial bank money. It's probably not the only one which is important for citizens, but there's obviously more to it.
Mm-hmm. I agree. Piero, you also mentioned the argument that especially when there's an issue of safety about one's savings, and perhaps some concerns about the safety of a particular bank, then people realize the value of central bank and public money, and want to hold on to that. So that relates to the possible implications that having digital wallets where people can easily transfer their savings, what that could mean also for financial stability and the stability of our banking system. We have this debate about holding limits, so that it wouldn't be possible to transfer exceedingly large amounts away from a bank deposit to digital wallet. Now this has also become a sort of politically difficult issue, how high the limits should be exactly, and who should decide on that. So maybe on this process, Valdis, if you have a comment on how do you see that taking shape in the future?
Yeah, on holding limits, that's indeed something which we are putting in place. In a sense, we are limiting the store of value function of digital euro, and again one can draw some parallels with cash in a sense that typically people do not store huge amounts of cash at home, so there are correspondingly also there are limits on this digital euro storage, having exactly those financial stability considerations in mind. And this was one of the indeed of stumbling blocks in the negotiations now on digital euro legislative proposal. because there was a bit of a tension between ECB, which was saying, okay, it's monetary policy independence and member states which were saying, yeah, but it's about financial stability and we have to be involved and so. But luckily we found this solution. So last week in Copenhagen in Eurogroup meeting we reached political agreement on institutional architecture, how this holding limits are going to be set. So I think we found a good balance between monetary policy independence and financial stability considerations from member states. So this is there, and then in a sense it will be for the ECB to set exact holding limit within the determined ceiling.
Okay, so there is a solution. But Piero, do you see financial stability as a major concern once we introduce digital euro?
Let me take a step back on this, right? I mean, this discussion about the financial stability, this is an issue that has been hunting central bankers for decades. Mm-hmm. And think about run on banks occur with or without digital euro. Actually, just think 2 years ago what happened in the US. SVB lost like 40 billion in a couple of hours. Mm. There was no digital euro there. Mm-hmm. So it's the digitalization itself of the minimum payment that makes much easier to move more money around. So financial stability concerns are there, regardless the existing of the digital euro. And to tell you the more, what's happening on the other side of the pond with stable coin makes this risk even higher. Because in case you have a run on a European bank, today maybe you move the money on another bank or some other assets. But still the money is in Europe. With the growing of American stablecoin, a run on a European bank means that we move the deposit out of the European system in the US. Mm-hmm. So the risk is there. Mm-hmm. And the central bank, the system, the ECB is at the core of the system. In our mandate is to preserve financial stability. So from the very first moment we start thinking about this issue, how to avoid that, having a different way of central bank money for retail, avoid that this could add additional risk to the financial stability. So we have been designing the project in such a way to preserve financial stability. So we embed from the very beginning safeguard to the process. Let me mention some of this. First, digital euro is not remunerated. So it means that people would forgo some small income that they can get from side deposit at the bank if they deposit that amount in the central bank money, in the digital euro. Second, we have this waterfall or reverse waterfall functionality which allows people to pay with digital euro even if their wallet in digital euro is empty. So you don't need to pre-fund your wallet in order to pay for the digital euro. Let me give you an example. Suppose now I go downstairs and see a nice pair of shoes. If we were already in the digital euro world and I wanted to buy that shoes, I didn't need to have already my 200 euros or whatever in my wallet to pay, because I could go and pay. The function would get the money from my account at the bank, transform it in digital euro and pay. So for people there is no incentive at all to move their money from the account, the bank account, in the digital euro wallet to pay. They can do that automatically. Third, only physical people can have access to the digital euro, so no corporation. Just to let you understand, the side deposit, corporation is a big chunk of side deposits. Mm-hmm. So these people cannot they have zero holding limit. Mm-hmm. On top of that was what Valdis was just saying. We are putting limits to the amount of digital euro that people can have. So at this point in time, the member state have decided the process to set the maximum amount. Within this amount, the ECB is free to choose the level, and we will choose it according to 3 principles, which are embedded in the legislation. One is the usability of the digital euro. I mean, to allow people to use it, the holding limits cannot be too low. The second is monetary policy implication, and the third issue is financial stability. Let me add one more thing, because this has to be clear. We do not put any limit on how much cash people can have. So logically, since the digital euro is an equivalent form of cash, in principle, we should not establish any limit of people about the digital cash. But we have the concern of financial stability. Mm-hmm. But we better be proportional on how much limit we put on the freedom of people. Mm-hmm. So the holding limits we need to understand that the holding limits is a restriction of people to hold central bank money, which is their money, our money. It's not somebody else's money. So we will put that. So the 3 principles that are embedded in the legislation will be put together, and this is what is going to determine the possible proposal by the ECB when the time comes.
Okay, so I suppose one can conclude that we have thought about financial stability implications. The holding limits are there in order to provide a safeguard, but at the same time, the risk of bank runs is nothing new, and it has always been there, and there are other ways banks can still run out of deposits and have a liquidity problem. I wonder if there are any questions from the audience. I have, of course, some more, but we have microphones. I can see 2 already, one here in the front. And please introduce yourself also, and then go ahead.
Marko Pahor, Banka Slovenije, also member of the HLTF on digital euro. So there's one, I think it's important issue was not touched in this panel, and this is a great panel to touch this, and it's the instant payments. Now we've seen it, at least on the surface, that the banks and the PSPs in euro area really stepped up their efforts of doing something with these instant payments. EPI is talking to smaller PSPs that have their own solutions to maybe adopt Euro instead. There's big talks about interoperability between different operators. And also, we've seen that the rapporteur in the European Parliament is a big advocate of private solutions on instant payments. So how do we respond to that?
So I guess the question is basically about the private sector solutions to the problem that we're describing. And why do we need a central bank push here necessarily? We have maybe some private sector alternatives. But do you want to... Valdis, comment on that?
Okay. On instant payments, indeed, this functionality is improving, but at the same time, we still do not have pan-euro area private solution. Also, the European Payment Initiative, which you mentioned, it's how many member states? 6 plus minus 5, maybe even now. Yeah. So it's a limited number of countries which are involved. It has not really yet picked up. But obviously, when we were designing the digital euro legislative proposal, we had also those private sector solutions in mind and thinking about complementarity with the private sector solutions using to extent possible existing infrastructures, and also thinking about remuneration models, because obviously when we are setting up a digital euro, we have to find the right remuneration model, which so that it's interesting for payment service providers, including banks, so that it's interesting for merchants. And I think this issue will be to a large extent solved by the fact that the ECB will be providing this infrastructure without charging any kind of scheme and other fees. So that will be an advantage for payment service providers. And what we are also proposed, in a sense, is have a cap on merchant fees, because it's clear that if we put a legal obligation of merchants to accept digital euro, because that's what legal tendered status does, it's important to ensure that they are not overcharged. And all in all, we see that what we'll be able to achieve is fees for merchants which are lower and more transparent than what current payment like international card schemes are providing. And actually, just last week we had a event on digital euro in Brussels, organized by Bundesbank, focusing exactly on this merchant perspective, and they were very much emphasizing this, that very much also when looking at initiatives like European Payment Initiatives or Vero or so, that it's not just replicating what the international card schemes does in terms of fees. So that was a major concern for them.
Mm-hmm. Right. Piero, how do you see the private sector role in this?
No, I mean, yes, this is a very important issue, but let me go back to what I was saying before about the coexistence and the healthy equilibrium between private and public money. We are discussing the same things. At the ECB, we have been advocating and asking and supporting the private sector to develop a pan-European scheme. We have this European retail payment strategy in which we have been advocating for private sector to scale up at the pan-European level for many years. And we have been supporting any private initiative in this direction, because for us it's essential that we solve this dependency as soon as possible with all the possible means. So we have been encouraging. And the Digital Euro project is not against the private sector. We'll support this private sector effort to scale up at the European level. Let me give you three simple reasons how we are doing this. First, co-badging. Private initiative could co-badge with the digital euro, thereby providing to their clients coverage. So their client could pay not just where the private sector solution is accepted, could pay everywhere in Europe with one single means of payments, thereby saving fees that the banks now pay to other solution. Second, because the digital euro is legal tender, Valdis was saying that all merchants need to accept it. The standard that the merchant will use to accept the payments of the digital euro are open standards. So, private sector solution can use the same standard to roll over Europe, their own solution, not the digital euro, their own solution, thereby making easier for them to scale up at the pan-European level. Today is so difficult because it's costly to expand your own private acceptance network. It's extremely costly. The digital euro would provide that for free because it's a public infrastructure. Mm-hmm. But there is one dimension that we do not discuss so often, but is key. The digital euro, it's the technical infrastructure, the back end, will not rely on scriptural money, which means, an entry in a book. It's something more sophisticated. I don't want to become too technical. But it's so sophisticated that allows us to exploit what we call conditional payments. Conditional payments could be the future because it allows you to condition the way you use money on many dimensions. Today we condition the use of money on one dimension. Pay Valdis this amount at this point in time. What if we could enlarge the scope of conditioning? Pay only if the train arrives in time? Pay only if my goods arrive to my door and not before? And you can embed many other solutions. That's not the ECB dream. This is the reality. We just launched a call for idea, and Friday we published the result of this call for idea. I invite all of you to read this report to see how many ideas private sector is suggesting they could develop on the conditional payment solution. This is another way through which private sector could leverage on the digital euro.
Just to add my own comment on this, and the way I've looked at it is also, of course, that we want different methods of payments complementing each other. So I would be very happy if we also had instant payment-based payment methods available in Estonia. I hope we will, and then I hope we will also have digital euro as an alternative so people can choose. The problem with those initiatives so far, the instant payment based ones, for example, is that so far we do not have a pan-European solution that would have been successfully rolled out everywhere. And another issue is that this question of resilience, that at least we in Estonia consider very important, that you would also make offline payments if people are not using physical cash anymore, that would not be there with instant payments. Mm-hmm. And just to complement, Piero, what you said previously, that there's not much incentive for people to hold too much digital euro in their wallets because there's no interest payment on that. I think we should still encourage them to have a little bit, at least, for this for those emergencies. If there's like breakdown in the other electronic means of payment. But looking at the clock, I think, well, I have many questions still, but I promise to give another one to the audience, so please.
Thank you very much. Good morning, tere hommikust. My name is Jaakko Vero. I'm the head of the Financial Stability Authority in Finland. So we are the National Bank Resolution and Deposit Guarantee Authority in Finland. And I would pick up on this question about resilience, both in the online and offline form. So my question would be, how do you see the kind of resilience and preparedness by design in the online version of the digital euro? I heard from Mr. Cipollone that you're planning, for instance, to have 3 or 4 regional sites through which the digital euro technical operations would be managed. This is, of course, I think very much of interest to us on this side of the Baltic Sea. Also knowing that, for instance, ECB target services are mainly operated by 3 big central banks, somewhere very close to the Alps. So how have you been considering this issue within the ECB? How do you see this regional dimension? Can we expect that maybe we would have one of the processing sites for digital euro on this side of Baltic Sea maybe? How do you see this? And on the offline topic, I understand that the offline functionality is seen very much as something that would bolster the preparedness and resilience value added of digital euro. So just to make sure, can you all confirm that it is your view that if the Governing Council will decide to launch digital euro, that offline functionality will be available from the day one, and it's not being considered as a separate value-added functionality of the digital euro? Thank you.
Thank you for excellent questions. I think we have to be pretty quick with our responses looking at the clock, but please, Piero.
I can confirm that the structure of the at this point in time that the back end will be distributed on 3 regions. But this is because we tender the back end from at the Eurosystem level. There is an alliance of central banks that are providing the central bank. So at the end of the day, it's their choice where they will locate the center. This is safer than target services. It's safer because target services is 2 regions, 4 sites. So this is much more resilient than that, because this is at least three sites. So this is much more resilient than the target service, which is already very safe. On the offline, I can confirm that the intention is to start from day one, because it's so important for resilience definitely. It's not just resilience, it's also inclusion. So for us, day one is the day in which we will issue the digital euro also on the offline.
Well, I can just confirm this.
You're confirming it as well.
Yeah.
So am I. So from my perspective, the way I view the main arguments, first is really the need to have a European solution for payments that would be available in every, at least euro area country. We wouldn't be dependent on a foreign or service provider from outside Europe on a critical function. And indeed, this resilience is the second important consideration, and offline payments being an important part of it. So I hope it will be there for day one.
Now, let me add something. The whole infrastructure of the digital euro will rely on European providers owned by Europeans. So the resilience and the strategic autonomy is built in the process from the very beginning. So this is another layer of resilience, if you want. It's a different kind of resilience, but it's an important resilience as well.
Yes. So this, ladies and gentlemen, was just an introduction, because we will discuss all of those issues in greater detail now in the following panel discussions. But I will just want to thank you, Valdis and Piero, for coming to Tallinn once again and for providing your contributions to this discussion. Thank you very much.
Thank you. My pleasure.